All right, hola guys, que paso? How's everyone doing? This is Hala Pablo. Thank you for tuning in. Let's continue on with our Bitcoin updates. I kind of want to keep you informed now that we're retracing, and there are some new sentiments coming out, such as gold rather than Bitcoin becoming the storage of value, the investor haven amid tariff chaos. Bitcoin drops 16% in a month. Of course, we knew all this was coming like 3 months now. But yeah, now it's manifesting, and it's I don't want anyone to get freaked out. It's obvious why this is happening. Um, Crypto is just can't be relied upon. It's unreliable right now, and volatility has been manufactured, obviously, because of the news and because of all the scare and the fear and everything. And that's it's happened for a reason, I believe, to drive the prices down so the big boys can get in, can get cheaper crypto. Washington is in bed with Wall Street, and all the constituents. It's quid pro quo, right? The lobbyists and everything. So don't doubt for a moment that there's not unspoken, deep-seated, hidden interests that aren't revealed to the public. The good news is we can, to a certain degree, track their footprints in the price action and volume, and that's what my technical analysis endeavors to uncover as much as I can through volume and price action. Of course, you can't account for wash trades and dark pools of liquidity and things like that. There's some stuff that even like you can't. It's not revealed on the order books, and so we can't do anything about that. But by and large, we can track the volume and the price action and kind of put two and two together to equal four. It's kind of like algebra. You need to know what to add to what to divide to what, in order to get, to come up with the right answer to the equation. And so that's kind of like how VSA is. You look at the volume, you look at the price action, you look at the anomalies. I was talking to a guy in my group the other day about this, and it's not so much seeing it go up or down, but it's the hidden. It's like what's underneath the iceberg. It's not see what we see here is just the tip of the iceberg, but then when we look at it and we calculate it according to the synergy created between the volume and the price action, then we see that there's substance beneath the surface of the water that isn't immediately apparent to someone just looking at just like bald face price action. And of course, indicators, and there's so many different indicators. All they do is just report on what's already apparent, uh, you know, um, to the naked eye. Unless you're looking into divergences, bearish and bullish divergences, but that's a whole other thing. But we see that gold now is becoming the safe haven. And then I went ahead and I looked at the USTD dominance chart, and we see, let's see, stable coin. Yeah, look at stable coin pumping, right? So this, whenever stable coin, whenever USDT increases like this in dominance, it's, people are putting their funds, investors are going into USDT, into stablecoin, rather than Bitcoin and other crypto. Why? Because they're anticipating volatility, obviously. And so all of this is just a confirmation of the fear. It's the manifestation of the fear sentiment. And it doesn't go away quickly. All right. So that's, I've got news for a lot of the moon boys and perma bulls and stuff. I mean, I don't know how to break it to you, But unless we have a major paradigm shift in the fear and greed sentiment, some kind of event, some kind of cataclysmic catalyst event to change the macro trajectory of what's going on in the world, not just in crypto, but in the world, then we have to anticipate more of the prevailing sentiment or bias, which is fear, which is not bullish. Okay, regardless of whether or not the price pumps or dumps, if it pumps during a bearish, when the overall atmosphere is bearish and you see a pump, it's probably a liquidity grab to the top. And those that aren't versed in VSA or in the algorithms of historic price action, we talked about the cyclical price action of Bitcoin every 4 years. We see the algorithms repeating themselves more or less on a macro degree, not micro, macro. Yeah. Those that aren't versed in that, they can be easily, they can be fooled. They can be inveigled. They can be, deceived into jumping in. And that's really how these big boys, the muscle, the real muscle, the institutions, the informed interests make their money by liquidity, moving liquidity, translocating liquidity from weak hands to strong hands. So, all right. So we see now what's going on. Obviously, the stable coin, gold, markets are increasing because they see more stability. It's a shield from the volatility, the impending volatility that's coming due to the tariffs and the trade wars and everything. And we've been tracking this stuff since January. As you know, those who have been following this channel know that we've been tracking this thing accurately. We've been calling it as we go, and it's really heartbreaking to see people just getting liquidated and have lost so much money when all of it could have been avoided had they understood the algorithmic historicity of price action and just a rudimentary understanding of patterns of tops and bottoms and how they play out, their genesis and their play out and their consummation in the end. And so, if you haven't subscribed to this channel, subscribe and I'll try to keep you safe as much as I can. And better yet, join our Discord group if you'd really like to learn how to do this yourself. And that way you won't need guys like me and you won't fall prey to a lot of the bad signal groups and things like that. And, people with ulterior motives. And so, we see here, so now like the question is how far down are we going to go? And I just did a video on it where I enumerated 3 liquidity zones that we're looking at. I want to look at the third one in this video. And this is the major third one. This is the big one. This is the grand target that I'm looking at, the 72 to 65,000. Now, if we mark down to this area, and I think we will, ultimately, it's a 30% drop from where the ice broke in this regression trend of this on this latter half of this diamond distribution. Historically, that's where the price action goes. The price action, when coming down after doing an all-time high mitigation, it comes back down. This is where market makers, this is where everyone's taking profit now, locking in profit, and having sold up here. Now their prerogative is to just get the price as low as they can to levels where they can rebuy, to where it's in their advantage to begin accumulating reaccumulation campaigns. And that hasn't happened yet. And we know that because of these expanding waves here. Look at this. Look at this expanding wave. It's kind of like a zigzag, right? You got a 5, a 3, and presumably another 5, and then we don't know if the zigzag is going to repeat, or we're going to mark down even further. We looked at the VSA down here, and I determined that these areas here, that this is a very weak bounce here. You can see this kind of like almost a non-existent lower shadow. Can't really call it a hammer. And then here we have the second bounce where we mitigated the low here. This is 78,000. What is it, 78 Gs? Yeah, 78. And so we're coming out of this 5. And presumably this is an ABC if we're going to continue with the zigzag formation. We see large demand volume coming in, but not a lot of result in the price action that could substantiate or that could justify this sort of volume coming in, even though this demand bar is a bit larger. Now, again, this is on the 8-hour. This isn't really showing great signs of strength, I wouldn't say. So we're looking at a potential, if this does mark up a little bit more to say 85,000, that at least will close out the CME gap that we have up at 85 Gs. But then I'm anticipating back down again, back down for maybe a triple bounce at the lows. And I think at that point, we're going to, okay, so let me just pull this. We're going to break down through it. I think it's inevitable. See if this goes. I'm going to pull up the 2021. We'll do a 6-hour. Yeah, so here, is this a 2020? No. All right. This is why I don't like doing these in the middle of a video, because it takes time to scroll all the way back. But we're going back 4 years. And we're going to the subcycle B area. Remember this. This is what we've been going off of since January. It's kept us very profitable, kept us very, very safe. Everyone who's been following these videos and in the Discord group can vouch for that. And if you're one of those that have been kept safe because of this, it's not me. It's the price action. Just following the price action schematics. Go ahead and leave a comment to let others know. Maybe they can get plugged in. So this is 2021B subcycle, and it's strikingly similar to 2025. You could see, and I'm not gonna labor over all the intricacies and details of it. You can go back and look at the videos. But here's the major break right here beneath this macro trend support line. It was in the same area from the anchored VWAP that we anchored to the preliminary supply point, and then from there it was curtains. The only difference is in 2021, it immediately began to separate from the ice, whereas this year the ice ran through this, proved as kind of like a support line, or rather a resistance line through it, and then but then eventually it succumbed to the same selling pressure and began to separate in proximity from it. Now, I measured from this break where it broke in the macro structure, this area here right before like the top of this redistribution, to where this first retrace, this first big long bloody wick came down, and it was exactly 30. It's about 30%, 31%. Now we know that this wasn't the bottom here because it continued to distribute. I think if this were going to mark up and make another all-time high, another top, it would have to cross this ice barrier here that occurred in March of 2022. Okay, but this is where it failed. We had just a conclusive failure on the anchored VWAP here, and this was the signaling of, basically this was the death knell here, And here it went all, and never again would it come close to the ice. And it actually, it went all, this was the beginning of a markdown that went, I don't know how many, I haven't measured it percentage wise, but it went all the way down to 16,000. That was that winter that we had, remember, a couple years back with the stable coin debacle and Luna and everything blowing up, all these crypto exchanges going bankrupt and belly up, and Celsius and all that stuff. So that's all that bad stuff that happened. Now I'm hoping that nothing like that happens this year, although it's possible because it's 4 years, right? But we'll cross that bridge if and when we get to it. But for now, we're going to look at this immediate, this area here could have been, there could have been one more markdown from this liquidity void here to this area, a further, let's take it from the bottom, a further 20%. So that would have put us at over 50%, a 50% retracement, which is typical for bear cycles, macro bear seasons, when retracing from an all-time high. Like I said, and then from there we marked up here. Now this could have been the bottom here, and so, but it wasn't, right? Because we got rejected off the anchored VWAP. So that said, so the same area, if we measure down for this present distribution cycle that we're in, 30%, the exact same, brings us to this area here. So this area, let me get my brush. This area here is this area here. So the bottom of this, all right, so that would take 65,000, 67 to 65,000 down, the top of which being 72 G's. So this area here, if we make it down to here, we're going to be doing some serious volume spread analysis, and we're going to look for a possible further retracement at that point. If we make it down here and we don't have just a ferocious reversal at this point, we're going to look for further downplay, another 20%, 20% down, and that could bring us down to this area here, 54,000. Some analysts are calling for 50s. And the more and more I look at this thing and read the signs of the times and the overall sentiment, if things don't perk up and something doesn't happen, and the fear persists and snowballs, and then the kind of the kind of FOMO that we had after the Trump inauguration to propel it all the way up to 109 grand, the same thing we could have in reverse. Well, now what goes up must come down, and so people have no problem enjoying this sort of markup. In fact, we haven't really had any kind of retracement from before the Trump pump, right? There wasn't any substantial. So this, if we retrace back to 65, which I think is on the menu, then that just merely brings us to the resistance line of this consolidation that we had prior to the breakout of Trump's inauguration. That's just the top of it. That brings us to like here where I drew this yellow support line. If we were to go off the algorithm of 2021, then we can retrace a further 20% before we find another bottom. And that would bring us somewhere around like this area here. This area down here, 54. This is 49. I don't know if we hit the 40s. Probably not, because that's a kind of like a big round number, and so the market makers will, people setting their buy orders in the 40s, then they'll probably bounce at 50, 51 or something like that. So those orders won't get filled. But 56 to 55, 54 is possible if the VSA indicates more distribution once we hit this liquidity zone. And then that that is this area here algorithmically in 2022 now. That's this area, and then we could have a spring, like a deep spring or a terminal shakeout from there, and which is this, and then up. And then whereas we failed in 2022, hopefully, fingers crossed, right? This would pass this year. And then we would go and create another all-time high. We'd be on course for creating another all-time high. But that's not going to be until later this summer, if that scenario is going to play out. The flip side is if we fail, like we failed in 2022, then it's I don't know what to tell you guys. It's curtains for those that are holding. If you've been watching this channel, hopefully you haven't been holding. You may be underwater in some alts. That's okay, because at some point I think the alts are going to have a season when Bitcoin is down. What we're looking for is stabilization of Bitcoin. The alts may not fall as profusely, as bloody as Bitcoin falls. That's something that I still need to do a lot of analysis on. My analysis there isn't complete. I'm not confident enough in it to do a video on it, but I am confident in this. So, all right, this video's gone on a while. I'm gonna wrap this up now. Hopefully you got something out of this. Like, subscribe if you haven't been subscribed to this channel. You would have known back in here that we were in a distribution, and so you would have been safe. You would have been safe. You would have known not to buy anything unless you want to momentum play some of this or scalp it. Then I'm not a scalper. I don't really screw around with momentums unless we're in a bull market. Then I'll do it. And I post my charts in my trading in my my Discord account, my Discord group. So that's a reason to check it out. I keep it extremely affordable. Learn to read charts. Learn to be safe. Learn to do it like the smart money way. I've received this this gift to be able to do this, and I believe in sharing. Freely you've received, freely give. So I've got nothing to shill, no courses to sell. I keep the Discord group extremely affordable. The only reason I charge anything is because it takes time for me to get around and answer all the all the questions and queries that go on in the Discord. But thankfully now there's more and more traders that are experienced that can also help out. But if that's something that interests you, that piques your interest, go ahead, check us out. I keep it affordable, like I said. Check us out for a few months. Learn to read these charts the smart money way. Learn to look at them like banks look at them. Learn to look at them like whales look at them. And then you're not going to need someone like me. You can go ahead and catch your own fish, and you could trade up and down. See, I don't short, I just long. But you could do this. You could short. If you live in an area in the world where you could do crypto on margin without a VPN or anything like that, then hey man, more power to you. You can make a ton of money. You just have to learn how to read price action volume. All you need is a little VWAP in there and trend line, support and resistance, supply and demand, and you're all set. My Discord group will get you going in the right direction if you're interested. All right, that's all I got. God bless you. God bless you and keep you. Thank you so much for subscribing, and I just pray that you're able to profit, stay safe, and profitable off some of this material I put up for free on YouTube. I'm going to let you guys go now. I'll talk to you soon. I'm going to drink some more coffee and continue to look at Bitcoin. I'm going to go talk to my group now. All right, guys. God bless you. Bye-bye.